Welcome back. I'm Pratap here. Today is the 4th April 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And we are providing complete free training. And all the training lessons are available at our NeoStock YouTube channel. To access the training lessons, click on the tab Posts. Some of you might be having a community tab in this place. Click on the tab, you get access to this post. This post is having a YouTube playlist link. You just click on the link. Now we will get into supply demand zone price action course. Here you have all the training lessons are available. The latest lesson is 29.6. So, first lesson you need to start your training. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So, please go through all these lessons one by one, but according to my training instructions. Then only learning this course will be helpful to you. And the training instructions I kept at our Telegram channel. You can get the link to our Telegram channel from this video description. And from the video description, join at our Telegram channel, and there at the top of the Telegram channel window, you can find pinned messages. Go to the pinned messages. One of the pinned messages are about the training instructions. So learn this course according to my training instructions. Then it will be helpful to you to make you become a very good independent trader in the coming months, and please make use of this opportunity. Now let's get into the HLQ zone analysis. Yesterday we identified 1, 2, 3, 4, 5, 6, 7 high liquidity zones, but none of the high liquidity zones we got the trades today. But you got opportunities from Nifty and BANKNIFTY supply demand zone chain HLQ zones. The 5 minutes HLQ zones are fine-tuned 5-minute zones. There you got few trade opportunities. Let us look into them first. After that we will look into HLQ daily and 75-minute zones. Look into BANKNIFTY. When we analyzed this BANKNIFTY, the most recent lesson, in our training lesson, we have analyzed BANKNIFTY last weekend. So in our analysis, here we identified a 5-minute zone, a fine-tuned 5-minute zone, but that is acting as a high liquidity zone. See here, we have a fine-tuned 5-minute supply zone. Actually, this is a high liquidity zone. Now it is because it is supporting multi-testing. But this is inside 25 minutes high liquidity supply zone, which is inside daily supply zone. And again, this 5 minutes fine-tuned 5-minute supply zone is also horizon to this 25 minutes high liquidity supply zone. And also the last weekend, I told you this is the range for the immediate range for the Nifty. But unfortunately, the next day, this 75 minutes demand zone, this is also having this 5 minutes HLQ demand zone as an horizon is violated. This happened on the last Monday. The Monday is holiday, Tuesday, the 1st April. Probably those who planned on 1st April trades on this area, probably your trade would have been stopped out. Of course, prices entered and gave you small move, but this is not good enough to get the profits. After that, it is went down, your trade would have been stopped out. Okay, I just kept it. I want to show you what is happened. Okay, that day, those who planned on BANKNIFTY, your trade would have been stopped out because these are the violated zones. I am just removing from the chart. After that, what is the range? The range will be, see here, the blue color indicates info line. Now the range will be changed up to here. This will be the new range. Almost 1,000, 1,150 points. Within this range, prices will be moving. That is what. See, almost came to this zone. Prices came this 25 minutes high liquidity zone. But again, before that, it started moving. That is what happened. The last Wednesday and Thursday also. The movement is in between. But today, see what happened. Price again entered into this 5 minutes supply zone, which is the origin for this 75 minutes HLQ supply zone. Because it is origin, it is supporting multi-testing here. Even today also it gave a trade, but today it is slightly PRs this zone. But that is okay because it is within the stop buffer only. And here you have a 15 minutes target zone. Go to the 15 minutes. You have a drop, 1, 2, 3, 4 base candles and rally. And today it gave a trade and finally reached the 15 minutes target zone. And when you got the trade today morning at, this is 15 minutes, right? Okay, I'm shifted to 5 minutes. Today morning at 9:35 candle and also 9:40 candle. Almost 10 minutes. Prices are within this zone. After that, see how sharply it came. Almost close to the 15-minute zone it came. That means it gave you 1:3 RR, minimum 1:3 RR it gave you. Again, some up and down moves are here and finally reached the 15 minutes target. That is the way Bank Nifty reached the 15 minutes target zone. Maybe I know some of you might have exited at 1:3 RR level. Some of you who are expecting again prices are moving at 1 minute trailing last stop you might have implemented. Or those who are using 5 minutes trailing stop, there are no proper 5 minute zones here. Drop, this is also failed here, see drop. These are not the leg out candles, drop candles, medium size candles. And those who are having a lot of patience and waited, probably, finally, your trade would have been reached exact 15 minutes target. Okay, for our performance point of view, how they worked, this is the profit. How many points move it would have given you? Let us see how many points Bank Nifty has given you today. See, this is whole analysis we did on last Thursday, this weekend. That is on Saturday, I think. Yeah, Saturday I released the video. Minus your entry, because this is a short trade. Sorry, this is a short trade. Entry minus profit. Your profit is here 51,488.70. Bank Nifty would have given you 326 points profit today. And moreover, we discussed Bank Nifty on this weekend, Saturday. See how perfectly these zones are working. Now you may ask a question, can we plan a trade next time? No, because once it is pierced, you can't use them. Maybe you can apply pierced zone strategies, you can plan, but not HLQ zone trades. These are all not HLQ, no more HLQ, this zone valid once it is pierced. See, slightly pierced and then sharply came down. And similarly, look into Nifty. Nifty also gave you an opportunity today, trade opportunity. Nifty, 2 weeks back we analyzed. Nifty is also part of lesson 29, we analyzed this Nifty. After our analysis, on 1st April, these 5 minutes HLQ zone inside 25 is violated. This is on 1st April. So it's no more valid. Just I want to tell you, those who took the trade might have been stopped out on 1st April. Same thing happened Bank Nifty also. See, after that, this 75 minutes HLQ demand zone, how it pushed and gave you some move. From this 75 minutes HLQ demand zone. And finally today, what happened? This is not today. This is today only. Yeah, today. And today finally this 75 minute zone is gone because it came deep inside. This is gone. And our focus is the next one. Here you have a 15 minutes HLQ demand zone. Inside you have a fine-tuned 5-minute zone. Let me zoom. And this entire thing is 75 minutes high liquidity demand zone. This is 75 minutes high liquidity demand zone. This 75 minutes high liquidity demand zone is having 25 minutes and 15 minutes high liquidity demand zone. And this is at the distal line, we have a rally base rally 5-minute zone. This is the one we drawn during our analysis 2 weeks back. If you look into the video lesson 29, the Nifty analysis video, the same thing, because I did not disturb the chart. So this is the horizon we have drawn, and today price exactly entered into the horizon. So this is the horizon. It gave you a trade. When it gave you the trade at 920 and 925 candles, prices are within this area only, in between both these time intervals. But if you observe, this horizon is slightly pierced. But you might have already taken a trade, okay. Next time you can't take the trade, but already you are in the trade. But stop buffer would have saved you the day. And after that, it gave you 1:3 RR. Because your 15 minutes target will be not here. Market is very strong, very bearish today. Even then, it gave you 1:3 RR today. 1:3 RR, it is a 81 points move. From your entry till this 1:3 RR, it gave you 81 points move. And after that again you see sharply it came down. And here below you have a 5 minutes high liquidity demand zone. Maybe it may act as a trap. We don't know. There is a possibility, but that didn't happen today. So if anybody would have planned another trade in this 5 minutes high liquidity demand zone, your trade would have been stopped out. After that, prices, after this 5 minutes HLQ demand zone, prices entered here into a daily zone. Here we have a daily zone. This is the daily zone. See, this is the daily 125 minutes high liquidity demand zones, and 75 minutes demand zone also this zone is having. Inside you have a 15 minutes demand zone. See here. Here you have a 15 minutes demand zone. And this entire thing is 25 minutes demand zone. Inside this 15 minutes. And if you draw 5 minutes, this is the fine-tuned 5 minute zone. This is the fine-tuned 5 minute zone. This is one trade opportunity within this area. Apart from that, below we have seen these LOTL scenarios, 5 minutes, 2 5 minutes LOTL scenarios. And if you combine both, risk management is very difficult. Because our software identified as a rally 6 candles, 1 2 3 4 base, 2 medium size leg candles, and then rally candle. That way the zone risk also increased. If you are adding this one, both risk management is very high. So that's why you should not plan in the first one. Second one also, you should have some fine-tuned entry until you get 2% risk level. Not beyond you can plan. So here you have to opportunities. So this is the first one. Prices came close to this, but not up to this fine-tuned 5 minutes. A little shortage of fine-tuned 5 minutes. If you would have got this trade, maybe another good profit you would have got here, but I am sure narrowly you might have missed your trade here. After adding entry buffer also, narrowly you might have missed the trade. If you are taking type 1 proximal, you would have got the trade. But type 1 proximal, again, risk will be increasing and risk management again may not be possible to give you a trade with 2% risk. So that's why I'm saying this is slightly you might have missed, but it gave a good move after it entered into this 25 minutes high liquidity zone. Here we have 25. This everything is inside the daily zone. Inside the daily zone. From 25 minute zone, it started moving up. And after that, price struggled a lot of time here. And finally, this zone is violated. And then it came to the below one. Below one, you can't take a trade here because the risk is very high. You have to combine both. You have two zones. This is the first one and this is the second. Both 5 minute zones are overlapped with each other. So probably somewhere at the closing hour of the market, maybe somewhere here, if you plan your trade somewhere in the fine-tuned area, a little above, your risk management would have been limited. I mean, let us look into that. See why I have drawn the blue color line, you will understand. See, this is a 5 minutes high liquidity zone. This is another 5 minutes high liquidity zone. Risk management point of view, probably somewhere you have to maybe, let me say here, we are planning our trade somewhere here. Within this area, and because you need to add some stop buffer also. Definitely, approximately I am calculating this area, definitely you will get within 2% level, whatever the blue color line I have drawn. So first 5 minutes HLQ demand zone, you can't take the trade because it is risk management is difficult. So I am deleting the first 5 minutes HLQ demand zone. This is the bottom one. In bottom one also the risk is high. So that's why a little inside we are planning our trade. Now you see. So price entered, definitely our trade would have been executed. And after that, how many points Nifty would have given you? Maybe another 60 or 70 points. But anyway, you can't take this because this is the last hour of the market, last 45 minutes of the market. Last 45. Generally, last half an hour we don't take. This is the last, close to last half an hour only because this is a 1455 candle. 1455. But there it moved. The reason for this movement is here you have a 5 minutes high liquidity zone. See, first 5 minutes high liquidity zone, you got the trade. Second 5 minutes high liquidity zone, your trade would have been stopped. And third fine-tuned 5 minute zone, narrowly you missed the trade. And finally, fourth 5 minutes high liquidity zone, again it pushed the market up. See, this is how we should understand how our high liquidity zones are helping to capture the some moves. Of course, sometimes our trades will be stopped out because they are not exactly stocks near demand and supply zones. If they are near supply and demand zones, you can expect 80% success rate. So without near supply demand zones, still we are taking trades, probably their success rate will reduce, maybe up to maybe 70% or maybe 60% level, your success rate will reduce. See, many times we have seen Nifty and Bank Nifty from the fine-tuned areas, prices are moving up, even though they are not near daily or 75 minutes HLQ zones. See, daily or 75 minutes HLQ zone trades advantage is they always helps you get a maximum success rate, up to 80% success rate. But the other HLQ zones also gives you good success rate, but you can't expect 80%, maybe 70% or maybe 60%. So that's why we are seeing the 5-minute zones and all 5 minutes high liquidity zones from Nifty and Bank Nifty supply demand zone chain. They are giving you the trades. So this is one example. This is another example. This is also almost close because we have drawn a type 2 proximal risk management point of view. Otherwise, this would have you would have got this trade and it gave you some profit. The real failure is this is the one. It didn't give any move. A small move that is negligible. But here it gave a very good move. Here it gave a very good move. And also here it gave again. But this is closing hour. It gave a good move. So this is the beauty of supply demand zone chain. But when you can look into the supply demand zone chain, especially daily 75 minutes HLQ zone traders, you can look into Nifty Bank Nifty supply demand zone chain on those days where you don't find trades in the other your HLQ zone. See, all these HLQ zones, we didn't get trades today. Not even they went into the zones. Only one zone, that is Zidus, prices went, but we know the zone will be stopped out as per our lesson 16 concept. Because the 5-minute structure is not good. Because there are no base candles in the 5-minute structure. And inside the 5-minute structure, you have a supply zone inside the demand zone. You need to have a demand zone to plan long trade, not supply zone. So that's why we know the zone is violated. Exactly the way we predicted, it is violated. Remaining prices not even entered into the zones, remaining zones. Okay, anyway, this is our Nifty and Bank Nifty from lesson 29, what we analyzed and how we got some trades from our analysis we did earlier. Bank Nifty has given excellent trade today. This is the most recent analysis during the last weekend. Okay, now let's look into the HLQ zones. See, first let me start with Zidus. Zidus, this is a rally base with hidden body. It is a rally candle. Dynamic view, it is a rally with hidden body. See, this 75 minutes today easily violated. Why? That you will understand once you go to 15 minutes time frame. See, 15 minutes time frame. Did you notice here the structure? First of all, I got doubt by saying 15 minutes itself. Because it is looking like drop, base, drop, but actually it's not drop, base, drop. It is a drop, 2 base candles, medium size leg candle, part of the base. And then a rally candle with a hidden body. So it looks like excellent because hidden body, rally candle. But the moment you go to 5 minutes, you get clarity. First of all, huge gap is there. Hide that gap. You will get clarity. See, now you see. This is a drop candle, 2 base candles. So this is also medium size candle, part of the base. Go to 5 minutes. Because of the cap, this candle is not looking very clear. So hide this candle, hide that gap. Then you will understand. Now you see. So this is the drop candle. This is the base candle. This is a drop candle, leg out candle. Actually, this is a drop base drop. You have to draw a supply zone like this. But how do you draw a supply zone inside a demand zone? It is meaningless, right? So that's why I said this zone will be violated. Why? Because here after this, if you want success in this zone, after this drop candle, you should have a base candle. After that, rally candle. See, after the drop without a base, you have a rally candle with hidden body. See, this is a drop. Because of this huge gap, scale is adjusted. See how scale is reduced. That's why this is looking small. That's why always we are hiding the scale. The moment you see the scale is again adjusted to all these candles length. Now it is clearly seeing drop, base, drop. So that's why by keeping this point in mind, this is a big candle. 5 minutes candle is a big drop candle and rally candle. In between, no base candles. So that's why this zone will be violated. Several times we have seen these scenarios in our HLQ zone analysis videos. See, today it violated. When it violated in morning 9:15, 1 minute candle itself it is gone. Go to morning 9:15, 1 minute candle. See, this is morning 9:15, 1 minute candle itself. This is gone. It is pierced and the next candle is completely, this zone is gone. After that, market was moving down, down, down. At the end, some recovery. So this is the only stock violated, at least entered and violated as per our prediction. Remaining, not even prices entered into the zone. Look into the zones, Cumins. Cumins already we analyzed previously. Let me go to the daily time frame. It is a daily chart. See, this is today's candle, not even entered into this. Here we have a 5 minutes high liquidity zone. Our trade plan is on this area. But price did not enter. Next one is HDFC Life. And this year already we have a tested zone on Wednesday. So we can't plan trade on this. The reason is this fine-tuned area is also slightly pierced here. And the upper one, there is no fine-tuned zone. That's why no trade plan in this zone. Here you have one more fine-tuned 75. We have two 75-minute zones. Inside 75, 15 minutes and 5 minutes. That 5 minutes is tested on Wednesday. After that, prices came. It gave yesterday, anybody would have taken a trade, you would have got profit from this. The reason is, even though it is pierced, it is within the stop buffer. But this is the one no fine-tuned 5 minutes zone. But anyway, today prices didn't enter. Even if you enter, you can't plan any trade. Next one is IDFC First Bank. See, IDFC First Bank also, it is having a tested zone. And it is having a fine-tuned zone here. Let me explain how I have drawn this. I think, 75. In the 75-minute zone, inside daily, we are fine-tuning 75. See here, failed ERC candle as a drop, two base candles and a drop. Even though I am not fully convinced with this candle, I have a dilemma. Is it a medium or a large candle? But okay. Sometimes we can compromise and draw, but low inside 5 minutes level, we can't compromise. And also here you have a rally, base, drop, another 75-minute zone. And also here you see rally, base and medium size candle is also part of the base and drop candle, another 75. We have three 75-minute zones. Again, this 75-minute zone should be fine-tuned with 15-minute zone. See the bottom one? We have a drop, three base candles. And drop candle. What happened? This is 15-minute zone. Why I marked with 5 minutes color? Okay, I think 5 minutes I didn't fine tune. Maybe I forgot, or let me first change the color. This is the 15-minute zone. I think I made some mistake. 5 minutes I forgot to draw, or there is no 5-minute zone. I don't know, but let us check. So this is a 15-minute zone. Wick to wick we have to draw. This is a 15-minute zone. See, drop, 3 base candles and a drop. Inside 75. And also here you have a 15-minute zone here, rally, 3 base candles and a drop candle. And also here also you have a rally, base, drop, 15-minute zone. So we have 3 15 minutes fine-tuned zones. And these 15 minutes fine-tuned zones, again you need to fine-tune with 5 minutes. Now we will look into this zone for 5 minutes. Maybe I might have made a mistake while drawing. Okay. So this is the one drop base drop. Probably this also we can consider drop base, 2 drop base drop. This you can't consider. Because if you consider this is a base, this entire candle is closed inside the base. It should come out of the base. Maybe we can draw a zone like this. So this is the one I've made a mistake here by not drawing. And here also, maybe 2 5 minutes order flows are here. Drop base drop, drop base drop. And what about here? Here you see you have a drop candle, 5 base candles and a drop candle. This is a high exposure, excellent zone. So that is the reason why next time when prices entered, see how nicely it pushed the market down. I mean the prices down. But it is a tested zone, you can't plan a trade. There are higher chances this zone will be violated. But is there any LOTL zones created? Base candle or failed ERC? It is not a clear, right? That's why you can't risk by planning another trade here. Maybe this could be rally to base candles and drop LOTL. If it is LOTL, we can plan one more trade here. But I have some concern about this candle. And here you see excellent rally base drop. In the origin, also you have a rally base drop is there. Next time again LOTL zone is created and this base candle slightly pierced this zone and came sharply. Those people who took the trade in this rally base drop, in the retracement who took the trade, they would have got a very good profit here. But what happened at the time when prices entered, this base candle slightly pierced this zone. Because it is slightly pierced, it is no more valid. But this is valid. This rally base drop with pro gap is valid. So that's why this is the area we can plan a trade. So this is how I analyzed this stock. But anyway, today price did not enter into the zone. See today's daily candle. This is the daily candle. And Supreme Industries, I think we already analyzed this stock. I already explained previously. This is also having multiple order flows. But one of these order flow is already tested. So next you can plan trades. But here today prices did not enter into the zone. A drop candle. Zidus we have seen it is violated. ABB is just 75 minutes high liquidity supply zone. Here we have a 75 minute supply zone. Go to 75 minutes. Software identified this as a drop, 3 base candles and drop. But 15 minute structure is not good. So I'm not comfortable with this structure. But from where it picked up the orders, this leg out. That's why I got the doubt and I went to 5 minutes time frame. Now in the 5 minutes time frame, see here, drop, base, drop and follow through. This base candle, see it picked up the orders and again came down. And once again, it picked up the orders and now this entire leg out formation has formed. That means this is the lower time frame zone horizon for this entire 75 minutes high liquidity zone. That way you can plan a trade in this horizon. But anyway, today prices did not enter into this zone. And the last one is Ponavala. Ponavala we already discussed, right, previously. I think Ponavala we analyzed the stock. Maybe doubtful because it is not near this to the stock earlier. Okay, it is a 75 minute zone. How our software identified it? As a rally, 1, 2, 3 base candles and drop candle. And this one is fine tuned with 15 minutes. We have multiple 15 minutes order flows here. Here is one 15 minute zone, rally, base, drop, follow through. And also here also you have a rally, base, drop, multiple times these prices are testing, maybe high liquidity. And we have a third one, drop, base, drop. But here I did not fine tune with 5 minutes. Why? That we will see in 5 minutes time frame. Okay, in the 5 minutes time frame, here you have two 5 minutes order flows are there. Rally, base, drop. Again drop, base, drop. Here risk is a little higher. Maybe you need to take a fine-tuned entry here to manage the risk. This is a small risk. If you feel maybe price before reaching it will go down, use entry buffers. That way you can plan the trade. Because the type 1 is here, type 2 is very far, close to the distal. Sometimes you may feel price before reaching type 2 proximal, again it will come down. So that's why use some entry buffers. And where is the next one? What happened to the zones? Okay, we analyzed above. Okay, let me. So, okay. Yeah, here. See, I considered this as a maybe failed ERC, like a rally, base, drop. Of course, it is not, may not be, maybe it could be base candle also. But that is okay, because here more important the horizon, this is the area. Why I selected this one? Here again they are picking. Risk management point of view, you can draw type 2. But why I have drawn type 1, maybe I want to show you something. Yeah. See, this zone is testing multiple times. See, this is the first time, again second time, again third time. Maybe this is the high liquidity zone several times. So that is the reason why we want to plan one more trade in this until this is violated. Okay, fine. So this is the 5 minutes. This fine-tuned 5 minute zone is could be high liquidity zone. Okay, apart from that, the third 15 minute zone, why we didn't draw identify 5 minute zone. See the structure, candle structure. 1, 2, 3, 4, 5, 6, 7, 8. So many candles moving in a narrow range. So many base candles. So that's why planning a trade in this area is not advisable. maybe this will be easily violated. You may say, why can't we take this drop, 2 base candles and drop, why can't we draw? We can draw, but see, previous candles also, almost same size. Everything in a narrow range. There is up and down, some swings are there. Then I would have considered this as a drop, 2 base candles and drop. There are no swings. Everything moving in a narrow range. See, these kind of observations you should make. Sometimes also you have such kind of big narrow range will be there. Maybe a little bigger but narrow range. But at the time you might be seeing the base candles might be swinging, moving up, moving down within that area. If such kind of swings are there, by seeing the candle swings, considering that is not the narrow range. Even though the overall range looks narrow, but it is, see the candles, all the candles are within this area. There is no swings at all here. Maybe sizes are changing, but no, like there is no swings. So that is the reason why I want to consider all part of the base. So a lot of consolidation took place. If swings are there, that is not the consolidation. But prices are moving a narrow range, there is a lot of consolidation in the prices. So it is weakening. Demand and supply are equal. Demand is getting weakened and supply is also weakened. And after that prices, when both are weak, if prices are moving up or down, the imbalance may not be because of institutional strong order flow. Maybe if both demand and supply is weakened, what will happen? Even a small additional order flow also will easily push the candle down or push the candle up. I already explained all these points in our training course. I think in lesson 2, I might have explained these points. So because of these reasons we are considering. I think not lesson 2. I explained maybe lesson 6 or 7. One of these lessons I explained a base candle count. The base candle count concept I explained these points. So this is the reason why I didn't fine tune the zone. So that's why we have only these order flows. This is the high liquidity order flow. And these two are the order flows. 5 minutes. But this is the one big risk. So you need to take deep entry. Or maybe you can take 3 minutes help also you can take. Maybe I made that mistake. I would have done that analysis. Maybe 3 minutes might give you better clarity. Happened trading there. Okay. Now it is much clear. Perfect. Is it trading view problem or my mouse problem? Okay. Now you see rally, base, drop. This is the way you can draw now. It's perfect, right? Risk is managed. This is the actual institutional order flow. This is 3 minutes and this is 5 minutes. See here 3 minutes is not clear. Maybe this is a doubtful. Better not to plan trade in this area. This is the right area. This is not really any good structure. According to 3 minutes, sometimes may work 5 minutes level. But something I am also not feeling comfortable with this. So better to avoid this. Let me delete this. This is the area, could be the right area. Now go to 5 minutes. Now look into this structure. It's getting struck. Okay. Now you see here. Here you have the actual institutional order flow. According to 5 minutes, this is also having, but earlier we got some doubt about this candle. 3-minute structure is not really good here. That's why I'm avoiding. This is the area. See, sometimes looking into the 3 minutes, when 5 minutes structures are not very clear, might be 3 minutes might be helping you. Don't go for 3 minutes every time. If 5 minute structures are very good, don't look for 3 minutes. 3 minutes can't replace 5 minutes just like that. It is only a supplement. When 5 minute zones are not very clear, for decision making, 3 minutes will help you. Okay, this is about Ponavala. And this is also, we did not get any trade today. Look into this today's daily candle. They did not enter into the zone. So these are the high liquidity zones identified by our software. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.